Hi, it's Phil from Northern Accountants. I hope you're well. Today is the fifth and final instalment of the NA Action Plan, which has been designed to support you in the battle against COVID-19 and help you survive and thrive in the pandemic. Today, I really wanted to talk about funding. Historically, I've spoke about the government support that's available. I've talked about budgeting and cash flows. I've talked about tax, and I've talked about R&D. So that's all designed to keep business moving and keep money flowing. And obviously now, once we understand all those options and we've covered those off, the logical sort of next step is to what's the shortfall and how do we go about funding it. So we've got two real options, to be honest, at the moment. We've got the CBILS loan, and we've also got the alternate options that are out there. So I'll start with the CBILS and then I'll move on to the alternate options that you've got there. So I spoke to a lot of bank managers, you can imagine, over the last couple of weeks, and they are particularly frustrated and perturbed about the stick that they're getting in the press and on social media for the lack of lending under the CBILS sort of process. And the reason why they're a little bit put out by all this is that they've simply followed the government's directives. So the government set the criteria in which they had to follow, and then when it's been kicked back, the government have pushed it back onto the banks, say the banks are being unreasonable. So, they feel that they've been unfairly criticised in this. Of course, there's things they can do better. There's processes they could improve, but that's the banking system as a whole. We know that needs to be better and needs to be improved. So, but fundamentally, a lot of the kickback and a lot of the resistance came because of the legislation that was in place behind the lending. So, what the government came out and did a couple of weeks ago is they made it more flexible. So, what they did is they reduced the need for you to go through the corporate lending option. Because that was designed to say if the bank would have lent you the money anyway, then the government's prepared to back it, because ultimately they're underwriting 80% of that debt, so they need to make sure that it's a good debt. They've removed the guarantees on anything under 250 grand. They have anything above 250 grand, you only have to guarantee the 20% above that. So again, it's not on the full debt as before, which was causing lots of people concerns. They've reduced their EBITDA calculation in terms of lending, so how much money you needed to make to be able to get the borrowing. That's come down, so that's made it better. And so they've opened up the doors quite a bit. Now the banks will always try to mitigate the need to lend the CBILS under the CBILS sort of thing. So what they've done there is they're trying to offer repayment holidays on their existing loans. Now one of the challenges they face is where banks are lending money and they're the secondary bank and they're not the main bank. So basically, there's a loan maybe with a Sainsbury's or a NatWest or somebody like that, but you run out of a Santander bank account. So it's difficult for them to pause the interest on those loans for NatWest because they don't control the current account or anything, or where the interest is credited to and things like that. So they were working on that last time I heard. They'll offer temporary overdrafts. That's another big option, but again, that's a short-term cash fix with issues attached to that. And then the other thing that they're doing is they're providing access to any deposit accounts that you might have that might be locked up. They're releasing all the penalties on that. So again, you can get access to cash that might be tied up elsewhere. The other thing that they've done, which is a really important thing in terms of just going back to the bank, is they've now taken your savings out of consideration when it comes to lending. Before, if you had 100 grand in the bank, the answer was use the 100 grand. Whereas now the banks are taking and the government is taking, they need to put you back into a place that you was before this crisis. So if you had 100 grand in the bank, their argument is that money could have been earmarked for something else, therefore it has to be protected. So they will lend you, if you needed to borrow 100 grand, they will lend you 100 grand to make sure that fills in the it fills in the deficit and you don't have to utilise your reserves, which could slow down the growth of the economy in the future. So I think that's a really positive thing, which I forgot to mention earlier. So just jumping back to after they've tried to mitigate it, if they can't mitigate it, then what they will do is they'll put you through the CBILS loan application. So again, speaking to the banks, a lot of the problems are not down to the actual the lending. It's down to the quality of the information that they're receiving, and basically it's poor because it's been cobbled together on the back of a fag packet, for want of a better expression. It's inconsistent, it's incomplete, it doesn't make sense, it's wrong. Assumptions are unreasonable, requests are unreasonable, and basically that's what's kicking back, because everyone's just ran out and said, I want to borrow whatever I can. And the government are not prepared just to throw money at people. Historically, if your business was in trouble before, They're not going to lend you money under the CBILS Act just to bail you out because you was in trouble anyway. So they don't want to throw, again, for want of a better expression, good money after bad. So again, it's about the banks need to understand the position. So I spent a bit of time with quite a few of the banks, and I've come up with a bit of a shopping list for the things that they're expecting as a minimum. So what they're looking for is the last 3 years of accounts, or as many years as you've got, less than 3 years. Up-to-date management information. So again, they want to see your accounts up to the end of, we're in April now, so they want to see your accounts up to the end of March. They want to know that you've got your finger on the pulse. They want to know that you've got a grip of your financial situation. They want to see a 3-6 month cash flow forecast with reasonable assumptions, with explanation, with the decisions that you've made in the forecasts. They want to know what loan value you want to borrow, obviously. They want to know the loan length. They want to look at the affordability. They want to know what other loan finance that you've got in place. They want to understand what measures you've taken to preempt the need for asking for this loan. So have you taken advantage of the VAT deferment? Have you got the government grants? Have you gone down the furloughing? Have you, have you taken care of the sick pay? What have you done? Have you cut costs? Have you reduced all your expenditure where you need to? Have you considered your own personal budget? Because anything over 100,000, they're going to want a personal asset and liability register for you and an income and expenditure. What they are not prepared to do is fund lifestyles. So they will not lend you hundreds of thousands of pounds to prop up your own lifestyle. They want to see that you've taken measures in there, so they're not going to see you gallivanting. I know you can't, but gallivanting on holidays or things like that. They want to see what you've done in terms of the budgeting in both business and the personal level. So they want to know what problems the COVID-19 virus has caused you, and how this money will help you overcome those problems, and what you're doing to overcome those problems. So there's lots of things that they want, and I think those things are not unreasonable. Because again, it is a government-backed loan. It is something that they need to be certain of, and I don't think what they're actually asking for now is unreasonable. So putting that information together should be relatively straightforward if you've got up-to-date accounting information and you're familiar with forecasting and things like that. So we've provided tools in the last couple of days about that. We've provided float software. Most of you are on Xero, have really good accounting systems because you're clients of ours. So you should be in a relatively good position to put those applications together yourselves. Of course, if you aren't, we're more than happy to help. In fact, we'll be delighted to help. And the way that we're going to do it is on a no-win, no-fee basis. So we'll help you put the application pack together. We'll produce the forecasts. And effectively, if it is unsuccessful for any reason, there'll be no fee for us. And we're doing that because it just feels it's fair, because ultimately, if it wasn't for the COVID-19, you probably wouldn't be making this application, and therefore to then be whacked with a bill from us, despite the fact that we're doing a lot of work and putting a lot of effort in behind the scenes, and it comes at a cost to us. It's harsh to ask you for another fee when you're already in, I suppose, financial distress. Let's not say difficulty, let's say distress because of the situation. So we're quite happy to take all the risk on that and support you on that, but you have to be committed to this. So it's not something that we're just going to say, oh, well, we'll just bang one in just in case. There has to be a good reason for us to be putting those cases in. So talk to us about it. You'll be talking to client managers on a regular basis. Ring us up. You can book slots in our diaries. You've all got links to that. I think that was in Friday's video, where there's all links to, in fact, Thursday's video, where there's all links to all our diaries. You've got a link to my diary. I'll put the links in this email again, so you can book in to have these discussions with the clients, with the client managers or me. So that's the CBILS Act and where we're kind of at with that. So I think I think we'll see an uptake in those. We've been quite successful so far. I think we've raised about £1 million so far on lending, which is good. So there's some good stuff in there. So we've been pleased with our progress and our success there. So in terms of an alternative, so in some instances CBILS is appropriate, or in some instances, your main bank might not have anything to do with CBILS. So someone like a Handels Banking are not touching CBILS, or they weren't last time I looked. They're not interested, which kind of leaves you in a little bit of limbo, because the banks are so busy with their own clients. They're not particularly looking for new ones, even if you're moving banks. They're not really that interested in it because it's not their appetite, it's not their problem, for want of a better phrase. So we've got some alternative options for you there. So some of you will know, some of you won't know that back in January we soft launched a new service within the company. We called it NA Money, and basically what we've got is access to over 100 different lenders, some of which will work through the CBILS, some of which are different types of lending. So again, we've got access to other lenders where we can go through and approach those. So obviously we've got the CBILS will want the same information that I've just touched on. The other one the other big one that we've found has been looked at is invoice financing as well. So releasing money that's tied up in your debtor book already. Skipton Invoice Finance are particularly keen on this at the moment. They've been particularly aggressive in the market, and if you take out the invoice finance with them, they will look at your CBILS as well. So there's a double option with those guys in there. So that's a good one. Asset finance, again, looking at your actual assets that you've got on your balance sheet, machinery, vehicles, stocks, all those sorts of things. We can secure, secure fixtures and fittings, all those sorts of things. We can secure lending against. And we've got access to a great panel there. We've got a couple of brilliant brokers. I know James Robinson from Asset Finance is a great guy. We work with him a lot. So again, we can make introductions there to help free those things out. We've got options around trade finance, again, supporting trade agreements that you've got in place in there. And we've got sort of other things that we can get access to, loans in particular. So we can get short-term loans, long-term loans, secured loans, unsecured loans, and all those kinds of lendings. So there's a whole wide range of things that we can do out there. And one of our client managers and the director over at Doncaster, Michael Hall, has been particularly involved in that. So what I'll do is I'll drop his diary note in there, because he's worked particularly close with the lending panels with some of his clients in particular over the recent months. So he's got a good grip on the appetites of where things are and what information they'll need. So I'll drop his link into his diary, and he's probably the best point of contact if you wanted to do something through NA Money. We've got other options to get into property finance and merchant finance in terms of drawing down on your credit cards, but probably right now they're not things that are particularly prominent or massively useful in this scenario. But again, we do have access to it. So if you've got any questions, like I say, get in touch with me or get in touch with Michael using the link below. Ultimately, I think that's about it in closing. That we've covered the government support, we've covered the cash flow and the budgeting, we've covered your tax options, we've covered your R&D, and now we've covered the lending facilities. This is something that we are going to want you to engage with us on. So the links have been in the emails to our diaries. Book into our diaries at a time. I think the diaries are open. There should be slots available, and we'll endeavour to support you in any way that we can. So other than that, I think that's it from me on this action plan. If you've got any questions at all, anytime, night or day, you can ring me, you can email me, you can WhatsApp me, you can text me, you can get in touch with the team. We are here to support you. I hope you and your families are safe. And like I say, we're in this together, and we will get through this together. So take care of yourselves, and bye for now.